Hello and good morning. You're tuned into Market Cafe. I'm Ankita Saxena, and the next half an hour I'll take you through all of that has transpired on the geopolitical front back home, and of course how the markets have moved and the cues you need to watch out for before the start of D Street. And the biggest news for today is, of course, Prime Minister Modi, who has announced that the Union Cabinet will consider a draft law proposing fast-track courts and stricter punishment for examination paper leaks. In a video message, he said that the government was committed to protecting students and would seek to pass the legislation at the earliest during the ongoing monsoon session. The announcement comes amid nationwide protests over the alleged NEET paper leak and continued opposition demands for the resignation of Education Minister Dharmendra Pradhan. Well, let's go across and listen into what PM had to say about this in the video message.
फास्ट ट्रैक कोर्ट के लिए विभागों को निर्देश दिए थे। आज विभागों ने लगातार मेहनत करके देर रात मुझे मुसद्दा भी दे दिया। फास्ट ट्रैक कोर्ट और कठोर सजा के प्रावधान के साथ का ये मुसद्दा कल कैबिनेट में चर्चा होगी। कैबिनेट के साथियों के सुझाव के बाद उसका अंतिम रूप दिया जाएगा और सोमवार से संसद का दूसरा सप्ताह शुरू हो रहा है। तब जल्द से जल्द उस बिल को सदन में पारित कराने का प्रयास किया जाएगा।
Meanwhile, activist Sonam Wangchuk has ended his 26-day hunger strike after what he described as long negotiations with the centre. Wangchuk broke his fast at Gurugram's Medanta Hospital in the presence of Union Minister JP Nadda and Jitendra Singh after the government assured that no legal action would be taken against the protesters at Jantar Mantar. Prime Minister Modi welcomed the decision, urging Wangchuk to recover the health, while CJP founder Abhijit Dipke thanked the activists for his sacrifice.
So with that being fulfilled, I'm grateful and I'll be happy to break my fast. Thank you. Thank you. Thank you. Thank you.
All right, let's get going with the rest of the show and talk about the markets then and what transpired on the global front. Let's talk about the Wall Street and how that shaped up. Well, a sea of red coming across, of course, because on the elevated crude prices that touched $100 per barrel for the first time since May, that it soared 7% on Thursday. In fact, WTI advanced roughly 6%, on the day. And this is after two Saudi oil tankers were hit in the Red Sea. And on the back of that, we do see crude that has still been a pain point for the markets. And of course, we had earnings also, whether it's a Tesla or an Alphabet, that also weighed on the broader market. Tesla tumbled almost 15%, its worst day since March 2025 after posting earnings miss on the second quarter. And we also had Alphabet that hiked its full year guidance for the capital expenditure, leading the tech giant to a 7% loss. And that's the biggest daily decline since May 2025. So big giants tumbling in trade there, and therefore Nasdaq saw a knock of almost 553 points, 2% downtick coming in there. S&P 500 was down 90 points, and Dow Jones was trading with cuts of almost 1% in trade. So that's how largely the Wall Street shaped up, cuts coming across Wall Street. But let's talk about the Brent crude that crossed $100 per barrel mark, and this is after the two Saudi oil tankers were struck off Saudi Arabia in the Red Sea, and on the back of that, crude remains elevated. Brent is sitting happily at $100 per barrel mark. As of now, a bit of a cool-off come in, a 0.6% downtick, and WTI is also above the $90 per barrel mark. 91.5 is where the WTI is also perched at. And let's take a look at what the Asian handover looks like. Asian handover is also in the red, of course, for taking a cue from the Wall Street, and on back of those elevated crude prices. We see Nikkei that's down 3% in trade. The Chinese markets, Hang Seng down 1.1%, Shanghai also down 0.5%, and S&P ASX 200 is also trading with cuts of 0.3% right now. So the oil-driven sell-off is something that the entire Asian market is also feeling. And look at the implied start to Nifty. That's also, showing a gap down start of 180 odd points at the start of Friday morning. But let's talk about the US tariffs then. And the US has imposed fresh 10% tariffs on imports from India under Section 301, citing concerns over forced labor in global supply chain. India was initially considered for a 12.5% tariff, but secured the lower rate after adopting measures to prohibit imports made using forced labor. Now, the tariffs are part of the action against 60 economies and came as India and the US continue negotiations on the interim trade agreement. My colleague Sumita is now joining us with the contours of this.
Absolutely. So today is when the 10% tariffs that President Donald Trump had announced way back earlier this year under Section 122 of the Trade Act of the 1974, they expire today. And in place of those 10% tariffs, what really happens is that the US has now imposed 10% tariffs on goods that are purchased from India and other countries, or what they described as their failure to impose bans on imports made with forced labor. Now, what's important to note here is that in this USTR finding, or in this final press release by the USTR, they state that this tariff rate, in fact, is applicable on certain other countries as well, and those countries include Bangladesh, Cambodia, Canada, the United Kingdom, Sri Lanka, Pakistan as well. So, of course, this is similar to those countries. And what's also important to note here is that this is related to the forced labor investigations that had been started under Section 301. And of course, India had presented a very, very strong counter when these hearings took place earlier in July this month. And India stated that we have additional safeguards. We have proper mechanisms to ensure that there is no importation or there is no export of goods produced using forced labor. And of course, this is important given the fact that 10% is a decent tariff rate. From the earlier one, we had 18% earlier on, but those tariffs were struck down by the United States Supreme Court as illegal. In fact, this is also important to sort of understand that this is coming in at a time when, of course, India and the United States are looking at finalizing a trade deal. Commerce Secretary Rajesh Agrawal told us a couple of days back that the framework trade deal is ready and that it will be signed at the right time. And in fact, understanding on both the sides is clear that the trade deal talks are progressing well. And of course, all aspects of the trade deal will get addressed. This is what he stated. Before it gets signed, all of these aspects will be addressed, and that also includes investigations under Section 301, which actually caught India and many other countries by a surprise completely. And of course, India has maintained that there is sustainability that's essentially needed. The other thing that's important to understand here in this matter is the fact that on June 14th, India amended its foreign trade policy to prohibit the import of goods that were produced using forced labor. So, of course, this is an important matter. This brings in some certainty, but definitely there is another investigation that's still pending, and that's on market access, and excess of goods imported. Right. So that remains to be seen.
Right, Sumita, thank you so much for joining us and explaining to us. And yes, 10% tariffs on India kicks off today. But let's talk about the West Asian tensions as well, and that have escalated sharply after Yemen's Houthis claimed attacks on 2 Saudi oil tankers in the Red Sea. That prompting Trump to warn of major military punishment for Iran. Trump said that Washington would hold Tehran responsible for any future Houthi attacks and indicated that he was close to deciding on a broader military response. The developments pushed Brent crude above the $100 per barrel mark for the first time since May, amid fears of disruption across the 2 critical global shipping routes. Let's listen in.
We're doing very well against the Islamic Republic of Iran. We're doing extremely well. They would like to do something, but I say they're not ready yet. They need more of the same. They're not ready yet. They got some evil intentions. We cannot let them have a nuclear weapon. If we did all this that I'm talking about your data centers, isn't that important? When they start blowing away communities one by one, we cannot let them ever even think about having a nuclear weapon, and that's exactly what's happening. They'll never have a nuclear weapon.
And Trump has made it clear that the proposed US-Saudi civil nuclear deal will only go ahead if Saudi Arabia recognizes Israel by joining the Abraham Accords. The White House said that without a normalization, the deal is off. Riyadh has consistently maintained that it will not establish ties with Israel without a credible pathway to a Palestinian state. The agreement will also require review by the US Congress before it can take effect. And Japan's core inflation edged up to 1.6% in June, matching expectations and marking its first increase since March as higher global oil prices began feeding into the broader economy. Headline inflation rose 1.7%, while underlying core inflation eased to its lowest level since August 2022. And talking about earnings, then Wall Street's AI spending concerns triggered a sharp sell-off in the tech stocks, with Tesla and Alphabet together losing around $500 billion in market value after their quarterly results. Tesla plunged 15%, wiping out nearly $200 billion, while Alphabet fell 7%, easing about $300 billion. Investors were spooked by the sharply higher capital expenditure plans. And back home, let's talk about the earnings and all the stocks that will be in focus. And for that, my colleague Rabindra is now joining us with the stocks and news.
Well, yes, it was a strong quarter for IGI Limited. Company reported a very strong set of numbers on a yearly basis. Company reported revenue at rupees 371 crore with an uptick of 23.2% on a yearly basis, and the revenue growth was driven by LGD loose stones and LGD jewelry segment growth, and EBITDA margin has also expanded from 57.6% to 60.3%. Shant Limited too can be in focus after reporting the quarterly numbers. Revenue saw an uptick of 7.5% on a quarter-on-quarter basis, and margin has also expanded from 8.1% to 9% on a sequential basis. Apart from this, keep an eye on Sonam BLW Limited. Company reported a very good set of numbers for the Q1 of FY27. Revenue grew by more than 52% on a yearly basis, and company reported margin at 22.5%. And if we talk about the net orders, then company's net order book stands at rupees 250 billion as of Q1 of FY27. Thyrogan Technologies too can be in focus on the back of the good set of number. Company reported revenue at rupees 240 crore as compared to 193 crore, with an uptick of 24.3% on a yearly basis, and EBITDA margin has expanded from 29.9% to 32.2% on a year-on-year basis, and the performance was driven by continued focus on operational efficiency, network expansion, and value-driven diagnostic, and revenue growth was primarily driven by the 26% increase in the pathology segment. So back of the strong set of number in Q1 FY27, Thyrogan Technologies too can be in focus.
Let's move on and talk about the other set of lists that Ashesha has pulled out for us for all the stocks that will be in news. Over to you, Ashesha.
Well, yes, let's first start with Shadowfax Technologies. The stock will be in focus on the back of a block deal that is expected to happen today. Now, remember, about 45% of the equity lock-in ends today. So in any case, we were expecting some selling pressure. And now with the block deal that has now been upsized, keep an eye out on this counter, we will see some bit of selling pressure. Meanwhile, Motilal Oswal has reported its numbers, and very strong set of numbers that the company has reported for the quarter gone by. Revenues have risen by a solid 28% on a year-on-year basis, and AUM growth of 31% is what the company has reported. Meesho, meanwhile, has reported in line to weaker than expected set of numbers, where loss for the quarter gone by, EBITDA loss, has come in at 225 crores versus 255 crores that the company reported same time last year. So losses have risen substantially on a year-on-year basis. Meanwhile, let's also talk about IEX, where the company has reported weak set of numbers because revenue is down 10% sequentially. EBITDA margins have contracted, and EBITDA too has declined by about 12% on a sequential basis, and other income meanwhile has doubled on a sequential basis. Despite that, company has reported weak set of numbers. Go Digit meanwhile has also reported weak set, with gross premium written declining by about 8% YOY. Net profit has declined by 38% on a year-on-year basis. So weak set of numbers which Go Digit Insurance has reported. Suryodaya Small Finance Bank on the flip side has reported strong set of numbers, with NII rising 28% and profitability which has come in at 75 crores versus 35 crores same time last year. Spandana Spurti, meanwhile, strong set, NII rising 22%, AUM growth of about 11% on a sequential basis is what the company has reported. Other than that, two other news pieces. One is Vascon Engineers, and there is a negative news here because the company has said that Reliance Industries has cancelled the work order valued at 132 crores. So some negative news piece that has come in for Vascon Engineers here.
All right, Ashesha, thank you so much for joining us with that list. We'll also talk about Infosys that has reported its quarter numbers that is largely steady for the first quarter, with revenue growing modestly on a sequential basis while the margins remain broadly stable. Darshita is now joining us with a detailed breakdown of that.
Right. Infosys has reported a largely inline set of numbers for this quarter one, with the revenues and profit broadly in line with the estimates, while the EBIT came in ahead of what the street was expecting. Now, the revenue rose 3.9% on a sequential basis, coming in at 48,200 crores, while the EBIT grew 4.3%, coming the margins with 21.1%. But the PAT, however, declined by 8.6% on a sequential basis. Now, the key takeaways from the quarter were that the constant currency growth returned to 1% from a 1.3% decline in the last quarter, but the management expects the volume softness to continue in the quarter two and following a one-time client termination which happened in this quarter. The margins remained resilient despite the AI investments, this helped by the currency benefits, and the company has also remained confident of maintaining its 20 to 22% margin guidance. The management also highlighted that the AI-led productivity is compressing the deal sizes and pricing, while AI monetization is progressing slower than initially expected, even as the AI pipeline continues to strengthen. Infosys has also narrowed its FY27 constant currency revenue growth guidance to 1.5 to 3% from 1.5 to 3.5%, while maintaining its operating margin guidance. The large deals wins remain healthy at $3.6 billion. Now, if you look at what the brokerage reaction is to the same, the Morgan Stanley maintained its equal weight rating and cut the target price to 1,075 from 1,112 rupees earlier, saying that the quarter was worse than feared and the guidance cut appeared Infosys specific. Citi also maintained has a neutral rating, trimming its target price from 2,065 from 1,080, citing a weak quarter once the acquisition-led growth is excluded. Now, among the domestic brokerages, Motilal Oswal maintained buy with a target price of 1,170, while Nuvama maintained buy with 1,250, and MK has also reiterated buy with a target price of 1,300 rupees, backed by resilient margins, steady growing AI business for the same.
All right, Darshita, thank you so much for joining us with that. And Infosys that has tapped in 30-year company veteran Ashish Kumar Das has the next CEO who will be taking over from Salil Parekh once his term comes to an end next April. Dash currently serves as the Executive Vice President and the Global Head of Services, Energy and Sustainability, amongst the other verticals, and has expressed excitement about leading the company through one of the most transformative periods in the technology industry. Let's go across and listen into Nandan Nilekani announcing the new CEO.
Our new CEO, who will take over on April 1st, 2027. He's from Infosys. He's been somebody who is a true blue Infoscion. He has worked in Infosys for 31 years. He's worked in every part of Infosys, be it in delivery, be it in sales, be it in account management, starting a new DC in Bhubaneswar, everything. And he's someone who I think everybody likes, respects. He's an uncomplicated guy who focuses on what needs to be done. His name is Ashish Dash.
And well, more on the earnings front, InterGlobe Aviation is swinging into losses in the first quarter of FY27 amid the sharp rise in fuel costs. The airline major posted loss of 382 crores versus a profit of over 2,100 crores in the same quarter last year. The loss comes in despite the 20% jump in revenue as the aircraft fuel expenses nearly doubled to over 10,800 crore rupees. We have Avi, who's here to break down the numbers for InterGlobe.
So InterGlobe Aviation has come out with its Q1 FY27 results, and they were clearly a miss on what the street was estimating. Talking about some of the financial numbers, the EBITDA is a 33% miss on what the street was estimating, while the street was estimating a solid profit from InterGlobe. It posted a 382 crore rupees loss, so which is a big negative for the stock. Also talking about the capacity growth, came in at the lower end of the guidance of 3 to 4%. The capacity, which is the ask metric, grew by 2.9% because got hurt by the Middle East disruption. So that is the reason the capacity growth came in at the lower end of the guidance. Up next is the fuel cost, which was the biggest drag on the profitability, as the fuel cost grew by around 85% on a year-on-year basis, since the benchmark fuel cost saw 120% spike. So despite the 21% yield growth, the major margin miss was because of the fuel cost. Also, the sequential improvement signals that the bad phase might be bottoming out, as the EBITDA has grown by 10% QOQ and the EBITDA has surged 149%, while PAT losses have narrowed from 2660 crores of last quarter to now at 382 crore rupees. So this might signal that the good times lie ahead for InterGlobe Aviation as the losses are narrowing down and the improvement is seen in the EBITDA performance on a sequential basis as well. Also, the management says that for Q2 FY27, the capacity growth to be flattish on a YOY basis, but the PRASK growth is guided at 25% on a yearly basis. However, the management maintains that from FY20, beyond FY27 till FY30, they will ensure the capacity growth to be in the early double digits or mid-teen range, and a major MOU with CFM for 1,000 engines assure that the bad times is just a cyclical pressure and not a structural discomfort. So, which signals a very strong positive growth for InterGlobe, but all in all, a poor set of results from InterGlobe Aviation.
All right, Avi, thank you so much for joining us with the results. And let's talk about another earnings candidate, SBI Life, that is set to announce its quarter results. So with the steady print in store, the street is expecting the margins to remain flat, and it will also assess GST's impact on the input tax credit. My colleague Mitali is now joining us with what to expect from SBI Life.
Right, talking about SBI Life preview. So yes, for the Q1 FY27, the streets are penciling in another strong, healthy quarter for the company. Starting with the top line, the annual premium equivalent or the APE, it is expected to grow by nearly 17% yearly. But what could be seen as a healthy quarter on a yearly basis, the streets are actually penciling in a moderate quarter numbers on a sequential decline that you could see for SBI Life. But moving to profitability, so value of new business, it is estimated to translate 18% year-on-year growth. This indicates that despite a softer sequential quarter, SBI Life, it continues to generate healthy profits on a yearly basis. Now, the key metric to watch will be the VNB margins. Expectations are for the margins to remain stable at 27.5% on a yearly basis, while on a sequential basis, you could see some moderation of around 80 basis points from the 28.3% figure that we noted in the previous quarter. The management commentary will be actually more critical than the headline numbers. Investors will closely track the company's APE growth outlook for the coming quarters and whether or not the momentum in the premium growth, it could be sustained going ahead as well or not. Another important area will be the VNB margin outlook, especially after the changes in the GST input tax credit regime. So yes, overall a healthy quarter expected on a yearly basis, but yeah, some moderation is being penciled in on a quarterly basis for SBI Life.
All right, so that's on the end what to expect on SBI Live. But let's also talk about quick commerce that is rapidly becoming a key growth engine for India's FMCG sector, with leading consumer goods companies reporting strong traction across the channel. My colleague Akanksha is now joining us with the details and the shift in the quick commerce trend.
That's right. If we take a look at the FMCG sector, quick commerce is steadily increasing its share in India's FMCG sales, and companies are now treating it as one of the fastest growing channels for consumer products. Dabur, for instance, reported its business driven by quick commerce grew by around 56% in the fourth quarter of FY26. Now, moving on to Britannia, the company said that nearly 70% of its digital business in the fourth quarter was driven by quick commerce. And in fact, Britannia expects quick commerce share of e-commerce to rise further to 85%. Meanwhile, Tata Consumer Products reported that digital and quick commerce together contributed 19% of its business in FY26. And if we look at HUL now, the company improved its quick commerce service levels by 14% during FY26. Nestle India, on the other hand, saw its online channels grow by 97% in FY26 across digital and quick commerce platforms. Finally, ITC said that digitally driven sales accounted for 34% of its FMCG portfolio in FY26. So this shift clearly reflects how important quick commerce has become for FMCG companies. It's helping FMCG companies not only expand distribution but also launch smaller pack sizes and quick commerce specific SKUs. At the same time, companies are also increasing spends on in-app visibility and digital promotions while using quick commerce for faster product launches and quick consumer feedback.
All right, thank you so much, Akanksha, for joining us with that. But it's time to wind down this edition of Market Cafe. I'll take your leave. Thank you so much for tuning in.